Hello and welcome to the channel. In today's video, we are going to be talking about something that can genuinely improve your results in Forex trading, and that is the best times to trade Forex in Kenya. And not just that, we're also going to be talking about the times you should avoid trading if you want to protect your capital and avoid unnecessary losses. Timing is one of the most underrated parts of Forex trading, especially for beginners. You see, many traders get frustrated not because their strategy is wrong, but because they are trading at the wrong time of the day. So if you're a Kenyan trader and you are serious about understanding how to trade smarter, not just harder, make sure to like this video and subscribe to the channel and share it with someone else who trades, because this could be what they need to hear today. So let's start with the basics. The Forex market is open 24 hours a day, 5 days a week. But this does not mean that every hour is a good time or good hour to trade. Some sessions are calm and slow, while others are packed with volatility, liquidity, and many opportunities to trade. As a Kenyan trader, it is very important to understand when each session opens and closes in your local time zone. So the Forex market is divided into 4 major trading sessions. We have the Sydney session, the Tokyo session, the London session, and the New York session. So if you are using TradingView, make sure your time zone is set to Nairobi so that you are able to see all the sessions in your local time. You can also add a sessions indicator to your charts. Just search for sessions in the indicator tab and you will see a list of indicators you can use. For this video, we will be using the trading sessions indicator. So now let's break down how these sessions translate into Kenyan time. So the Sydney session starts at midnight and ends at 9 a.m. Kenyan time. The Tokyo session also starts at 3 a.m. and goes all the way till noon. Then the London session opens at 10 a.m. and closes at 7 p.m. And finally, the New York session starts at 4 p.m. and runs up till 1 a.m. the next morning. So technically, the market is available to you at all hours, but that does not mean you should be trading all the time. Now, let us talk about the best times to trade Forex in Kenya. First up, we have the London-New York overlap, and this happens between 4 p.m. and 7 p.m. Kenyan time. This is easily the most active time in the Forex market, and it is often the most profitable. And this is because both the London and New York sessions are the biggest financial centers, and they are both open at the same time. This means there is higher liquidity, stronger volatility, and tighter spreads. Price often moves fast and decisively during this window. So if you are trading pairs like the Euro USD, the British Pound USD, or the USD Japanese Yen, this is the time where they are most active. These pairs experience major breakouts and heavy volume, making this period ideal for scalpers who want to catch a quick move and for day traders who want to ride strong trends. For most Kenyan traders, this time fits nicely into the day. If you work a regular 9-to-5 job, you can come home, freshen up, and still catch the most powerful parts of the trading day without having to stay up late. If you prefer to trade earlier in the day, the London session on its own from 10 a.m. to 4 p.m. is also a very solid option. This session is perfect for those who are full-time traders or those who have flexible schedules. Most major European news is released during this time, and currency pairs like the Euro USD, the British Pound USD, the Euro British Pound tend to make clean directional moves. So if you are a day trader or someone who likes a more structured trading routine that wraps up before the evening, the London session is a great fit. It also suits traders who are more alert and focused in the late mornings or early afternoons. Now let us look at the rest of the New York session, which starts from 7 p.m. to 1 a.m., which is basically after the overlap with the London market. This part of the New York session is still fairly active, especially for pairs that are related to the USD. If you are someone who is busy during the day, maybe with work or with family or with any other thing, this could be your trading time. Just keep in mind that it runs late into the night, so you need to be careful not to overtrade or stay up so late that it affects your routine. Swing traders sometimes like to enter during the quieter periods of the New York session, which is around 11 p.m., when the market starts to cool down and price action is more stable. If your strategy involves holding trades for a few days, this late New York window might offer you a calm entry point before the market resets the next day. Then we have the Asian session, which includes both the Tokyo and the Sydney sessions, and they run from midnight up till noon. So this session is generally slower, with less volatility, but that does not mean it is useless. If you are a range trader and you are looking to buy low and sell high within a tight sideways market, then the Asian session can actually be ideal for you. The market moves more slowly, trends are less common, and price often bounces between support and resistance zones. This session is also good for those who trade currency pairs like the USD Japanese yen, the Australian dollar USD, and the New Zealand dollar US dollar. So if you are naturally a night owl, or your schedule allows you to trade early in the morning or late at night, then the Asian session might work for you. But if you are trading something like the British Pound USD or the Euro USD during this time, you may find the market frustratingly slow, and it may not even be exactly convenient to wake up at 3 a.m. to trade, especially if you have other engagements or responsibilities during the day. Now that we have talked about the best times to trade, let us also talk about something that can either work for you or against you, and this is economic news releases. Economic data is one of the biggest drivers of price movements in the forex markets. A single report can send a currency flying up or crashing down in seconds. As a trader, you need to know when these reports come out so you can prepare, whether that means getting in early, avoiding the markets altogether, or adjusting your stop loss. European news is typically released between 9 a.m. and 1 p.m., which lines up perfectly with the London session. The US data, which tends to move the markets the most, is released between 4 p.m. and 8 p.m. Kenyan time, and that is right in the heart of the London-New York session overlap. So you want to pay attention to announcements like interest rates changes, GDP reports, inflation data, and especially the US, the non-farm payroll numbers. While trading around news can be very profitable, it is also very risky if you do not have a proper risk management strategy. Price can spike in both directions, and slippage is very common. So whether you decide to trade the news or stay out, just make sure it is a conscious decision and not an accidental one. Now let us talk about the times you want to avoid trading in Kenya. The first one is Friday afternoons. By this time, most professional traders and institutions are closing their books for the week. Liquidity drops, spread widens, and the market becomes unpredictable at this time. A trend that was strong in the morning can suddenly reverse out of nowhere, leading to loss of your capital. So if you must trade during this time, it is better to use a tighter stop loss and reduce your position size. Another time to be cautious is during major holidays, especially those observed in the US and in the UK. The market might technically be open, but without enough participants, price actions become slow and erratic, making it difficult to find good trading opportunities. Also, unless you are specifically trading Asian pairs, it is usually best to avoid Asian sessions, especially early hours between midnight and 5 a.m. This is because the market is quiet and it usually leads to lower liquidity. And as a result of this, brokers tend to widen spreads during these conditions. The final and probably the most overlooked bad time to trade is when you are not in the right headspace. If you are distracted, tired, stressed, or emotional, it is best to stay away. Trading is not just technical, it is also psychological. The markets will always be there, but your capital will not if you keep trading under pressure or on impulse. So in conclusion, the forex markets may be open all day, but only a few windows are truly worth your time. For Kenyan traders, the best times to trade are the London session, the New York session, and the overlap between these two. These sessions offer the right mix of volume, volatility, and opportunity. However, if your schedule allows it, and you focus on trading instruments that involve Asian currencies, then the Sydney-Tokyo session, especially during their overlap, can offer good trading opportunities. But just knowing how to trade is not enough. You also need to understand which trading style fits each sessions, how your own daily routine lines up with these sessions, and how to prepare for high-impact news. So whether you're a full-time trader, a side hustle trader, or just getting started, the goal is to find a rhythm that works for your life and then stick to it with discipline. If you found this video helpful, please like it, subscribe, and share it with another trader. Thank you for watching, and I will see you in the next video.